The U.S. stock market experienced historic gains Wednesday following President Trump's announcement of a nuanced approach to international trade tariffs, combining broad relief for most nations with intensified pressure on China. This dramatic policy shift triggered the Dow's largest single-day points increase in history, demonstrating the market's acute sensitivity to trade policy developments. The day began with significant market anxiety after China announced an 84% retaliatory tariff on U.S. goods, adding to a week of losses that had already seen the Dow drop approximately 5,000 points. Investors were increasingly concerned that escalating tariffs could reignite inflation and potentially push the economy into recession. The Chinese announcement particularly spooked markets due to its potential impact on American manufacturers and supply chains, threatening to significantly increase costs for companies proudly producing, made in the USA, products. The landscape transformed dramatically when Trump posted on Truth Social announcing a 90-day pause on most reciprocal tariffs, reducing them to 10% for countries actively engaged in negotiations. This decision came after more than 75 nations reached out to discuss trade terms, showing the widespread impact of the initial tariff threats. However, China faced a stark exception to this relief, with Trump increasing their tariff rate to 125%, citing what he described as their lack of respect for global markets. The market response was immediate and powerful. The Dow Jones Industrial Average rocketed up by 2,775.32 points, 7.4%, to reach 39,916.64. This surge was accompanied by similar impressive gains in other major indexes, with the S&P 500 climbing 5.9% and the Nasdaq 100 leaping 7.7%. These gains completely reversed the losses experienced earlier in the day, showcasing the market's dramatic response to policy shifts. Alan Sykes, senior fellow at the Stanford Institute for Economic Policy Research, provided valuable insight into the business community's perspective, noting that many had viewed Trump's initial tariff threats as a negotiating strategy rather than a final position. Sykes observed that the new policy demonstrated both flexibility in international negotiations while maintaining a firm stance on China, reflecting a more nuanced approach to trade diplomacy. The previous day's market activity had foreshadowed this volatility. Tuesday saw the Dow initially surge by more than 1,400 points following news of negotiations with several Asian nations, including South Korea, Japan, Indonesia, and Vietnam. However, these gains evaporated by the afternoon, with the index closing 320 points lower after the White House announced plans for another round of Chinese tariff increases. Carol Schlief, chief market strategist at BMO Private Wealth, emphasized the market's eagerness for positive trade news, noting that investors had been poised to react to any constructive developments. The 90-day pause provided exactly the kind of relief catalyst that market participants had been seeking, explaining the dramatic positive response. The situation with China remains particularly complex and tense. Trump's statement suggested a long-term perspective on addressing trade imbalances, expressing hope that China would eventually recognize that their previous approach to trade relations with the U.S. and other countries was no longer sustainable or acceptable. The dramatic increase to a 125% tariff rate for Chinese goods represents a significant escalation in pressure on Beijing, even as trade tensions with other nations ease. This series of events highlights the profound impact that trade policy decisions can have on financial markets, with investors demonstrating extreme sensitivity to both positive and negative developments. The contrast between the broad tariff relief offered to most nations and the increased pressure on China reveals a sophisticated approach to trade policy that distinguishes between perceived cooperative and uncooperative trading partners. The market's dramatic response underscores the significance of these policy shifts for global trade relationships and economic prospects. The day's developments mark a crucial turning point in international trade relations, with potential long-term implications for global commerce, supply chains, and economic cooperation. The market's historic response suggests that investors see these policy changes as potentially transformative for international trade dynamics, particularly in reshaping the complex economic relationship between the United States and China.